Hello guys, welcome to my channel. The Less is More. Today I will discuss an editorial from the Hindu newspaper and the topic is from the economy. So the topic of the today is virtual digital assets. Let's start an editorial. The title of the editorial is Virtual Digital Assets, India's Stand and the Way Ahead. Right. Let's start the editorial itself. Rule making is an arduous task, which means and difficult task. Oftentimes, the words in a gazette take a form of their own in the real world, diverging from the intent. This can be particularly challenging in the case of emerging technologies where change is rapid and constant. So here author is saying that rule making is a difficult task, and when the rules were made, the words in the gadget take its own form in real world and it diverges from its intent. So which can be particularly challenging in the case of emerging technologies which is changing rapidly and constant. Consider the infamous Red Flag Act the United Kingdom introduced at the advent of motor cars. It mandated that every motor car had to have 3 drivers, one at wheel, the second a fellow passenger and the third on foot, holding a red flag to alert oncoming horse-drawn carriages. So in UK there was a Red Flag Act in 18th century which was introduced at the advent of motor cars when the industrial revolution was started. So it mandated that the motor car had to have 3 drivers, one at wheel, the second as a fellow passenger and third on the foot, right, which will hold a red flag, right, to alert the other vehicles and horse-drawn carriages. Ostensibly established in the interest of safety, the act only ended up strengthening the motor car industry elsewhere in Europe. So this act was to ensure safety of the people in the British, but what happened is that it ended up strengthening the motor car industry in Europe. It was ultimately repealed in 1896, clearing the path for the golden era of British motor car industry and icons such as Rolls-Royce. So here the author has posted a story or historical example that how to ensure the safety the act was enacted and how it ended up or how it make difficult for their own. The advent of new technologies in fact often evoke red flag act of their own. History is replete with many such laws. From the internet to mobile phones, innovations were often curtailed. Today, there are calls for the prohibition of artificial intelligence and blockchain technologies. So, this advent of new technology also evokes red flag acts, kind of, which was imposed in the United Kingdom. So right now there is on call for prohibition of artificial intelligence and blockchain technology, a considered approach. It is therefore heartening to see India taking a measured approach to regulating virtual digital assets. A prominent and far-reaching update has been India's recent notification extending the anti-money laundering provision to virtual digital assets, businesses and service providers. So, what is India's approach in regulating these virtual digital assets? Recently, the notification was released and it has extended the anti-money laundering provision from the PMLA Act to virtual digital asset businesses and service providers. On March 7, the Union Finance Ministry in a Gazette notification extended these activities under the Prevention of Money Laundering Act of 2002. What kind of activities? Exchange between virtual digital assets and fiat currencies, exchange between one or more forms of virtual digital assets, transfer of virtual digital assets, safekeeping or administration of virtual digital assets or instruments, enabling control over virtual digital assets, and participation in and provision of financial services related to an issuer's offer and sale of a virtual digital asset. So on the said activities or on these kind of activities, the Anti-Money Laundering Act was extended. Earlier, these kind of activities were out of the ambit of Anti-Money Laundering Act. This means virtual digital assets platforms carrying out the said activities will now have to register as a reporting entity with the Financial Intelligence Unit India. The unit is what is this unit? National Agency to strengthen India's efforts against money laundering and terror financing. Reporting entity platforms such as CoinSwitch are now mandated to implement Know Your Customer record and monitor all transactions and report to the Financial Intelligence Unit India as and when any suspicious activity is detected. So this kind of reporting entry platforms such as CoinSwitch, they are now mandated to implement Know Your Customer, which means KYC, record and monitor transactions, and report to Financial Intelligence Unit India as and when any suspicious activity is detected. This is a step in the right direction. Such rules are already applicable to whom? Banks, financial institutions, and certain intermediaries in the securities and real estate markets. Extending them to virtual digital assets provides what? Virtual digital asset platform with a framework to diligently monitor and take action against malpractices. So this will provide these providers or platforms with a framework to diligently monitor and take action against malpractices. A standardization of such norms will go a long way in the making the Indian virtual digital assets sector transparent. What it will do or what would be the implications? It will make it transparent, also build confidence and assurance in the ecosystem, and give government more oversight on virtual digital asset transactions, which will be a win-win for all. So these will be the implications for imposing regulation on the said activities. Right. So what we have learned till this paragraph, and we have seen historical law, then kind of approach, that is measured approach. What was that? Extending the provision of Anti-Money Laundering Act to virtual digital assets. And what kind of activities? These kind of activities are included, right, under Prevention of Money Laundering Act. And what are the implications on platform? It will make them as a reporting entity, right, and the objective is prevent money laundering and terror financing, right, and which are there extended these kind of provision to any other entities, then it is bank, financial institution, and certain intermediaries. What would be implications? So these would be the implications. Reconsider tax rates. Such risk mitigation measures are in line with global guidelines put forward by the IMF and Financial Action Task Force. these kind of risk mitigation measures. FATF in fact has a comprehensive definition of virtual asset service provider. An extensive list covering what? Virtual asset service provider. The definition of virtual asset service provider is defined by FATF. Cover what? Intermediaries, brokers, exchanges, custodians, hedge funds, and even mining pools. Such guidelines acknowledge the role of virtual asset service provider. Acknowledge the role of virtual asset service provider play in regulating and monitoring the virtual digital assets ecosystem. What it will do? Regulate and monitoring this ecosystem. Such guidelines. VASP, virtual asset service providers, are what? Efficient bridges and I for regulators. To effectively implement Anti-Money Laundering Act, countering or combating the financing of terror principles. Through the latest PMLA notification, India too has acknowledged this. These such mitigation measures India has acknowledged. This could also be the basis for India to reconsider its tax treatment of virtual digital assets, which is an outlier both domestically and internationally. So, by imposing this kind of regulation, India should reconsider its tax treatment of virtual digital assets, which is an outlier, which means an outer body, or kind of this is an outer event or outer thing, though not associated with directly with this, but this regulation can be the basis, right, for reconsidering its tax treatment for virtual digital assets. After all, with the PMLA notification now mitigating the most critical money laundering and terror financing risks, there is little reason or no reason for the tax rates to be as prohibitively high as they are. So, now the regulations have been imposed on these entities. So, there is no need of having prohibitive taxes, prohibitively high taxes on these kind of entities. So, author is saying that perhaps there is an opportunity to bring virtual digital assets taxes on par with other asset classes. Reducing the tax arbitrage vis-a-vis other economies will also help stem the flight of capital. Reducing the tax arbitrage vis-a-vis other economies. It will help reducing the tax arbitrage. Arbitrage means in these there are two countries. Here tax rate is high, here tax rate is low, right? So if company is having a unit in this country A and this country B, so here tax rate is high, tax rate is low, so company will shift its operation in the country B. It will provide what? Tax arbitrage means margin, because the tax is lower in the country B, so that is called tax arbitrage. So reduce this tax arbitrage, as other economies will also help vis-a-vis other economies, compared to other economies. It will also help what? Stem the flight of capital, which means flight of capital, consumer investment and talent, as well as it will dent the grey economy for virtual digital assets, right? using the G20 platform. This is also significant given India's presidency of the G20. This is significant. Why? Given the India's presidency of G20, the finance track of the G20 is spearheading critical discussions on establishing a global regulatory framework for virtual digital assets. So, critical discussion on establishing a global regulatory framework for virtual digital assets are spearheading. There is all India's leadership and experience is key here. There is also an opportunity to reconsider the steps taken by other G20 nations. Opportunity and consider the steps taken by other G20 nations. In Asia, Japan and South Korea have established a framework to license value-added service providers. While in Europe, the markets in crypto, while in Europe, established framework to license virtual asset service provider in Japan and Korea. Even in Europe, the markets in crypto assets regulation has been passed by the European Parliament. Even as India spearheads global coordination, ushering greater oversight on the domestic virtual digital assets ecosystem could provide much needed assurance to everyday users as well as regulators. Going forward, a progressive regulatory framework will instill the animal spirit in India's innovation economy and establish India's virtual digital assets leadership, a lot like how Rolls-Royce rekindled the British manufacturing industry in the early 20th century. So this is a good conclusion which you can use, that assuring greater oversight on the domestic digital assets ecosystem could provide much needed assurance to everyday users as well as regulators. Going forward, a progressive regulatory framework instill animal spirit in India's innovation ecosystem and establish India's virtual digital assets leadership, a lot like how Rolls-Royce rekindled the British manufacturing industry in the early 20th century. So this was the editorial, and we have seen that what can be extract here. Again, reconsider tax rate. Here the author is saying that these imposing regulation on the virtual digital assets providers, service provider, this will be a basis for reducing a tax arbitrage. Okay, and use the G20 platform for being a leader in this virtual digital asset ecosystem. Okay, because given the India's presidency of G20, and India can be a leader in this, as how Rolls-Royce rekindled the British manufacturing industry in the early 20th century. So India can also have a leading role in virtual digital assets leader service providers, right? Okay, so this was for today, guys. I hope you would have enjoyed my explanation. Thank you for your patience. Bye bye, signing off for the day.